But shifting focus back to some of the earnings and especially the financials earnings, V Vaidyanathan, the Managing Director and CEO at IDFC First Bank, spoke with us. Listen in to the excerpt of that conversation.
Time for a quarterly chat with the top management of IDFC Bank, and gives me great pleasure, as always, to get on board the CEO and Managing Director, Mr. V Vaidyanathan. Mr. Vaidyanathan, good morning. Thank you for joining us. Let's understand first the big picture. The big picture in our understanding is that the strong growth continues and the good work on credit costs normalization has started. Can I say that the quarter gone by was not a bumper one, but things are moving in the right direction?
Main thing is, see, for a good bank, you need deposits. So I think the biggest thing the bank has achieved is growing deposits by 42% last year, and now our deposits are touching 2 lakh crores for the first time, and that's a really and 78% of our deposits are retail. It's a very big change from 27% 5 years ago. So I think the biggest achievement is having a very strong growth in deposit. That's a foundation. And then, of course, the loan book is coming along nicely on top of that.
On one talking point from a market standpoint, of course, is the credit cost normalization. Where is the journey headed there? Because that, in a sense, is the biggest moving part for IDFC Bank.
See, credit cost, the good thing for our bank is now that for very long time, our credit cost is very much under control. Even last year, our credit cost on the average loan book is only 1.32%, which is pretty good in the segments we operate. And not pretty good, it's probably the best. And as a percentage of total assets, it's just 0.97%. So our credit cost is behaving very well. I'm really happy to share that our NPA, if you just take out infrastructure, our NPA is now down to 1.55%. And our net NPA is down to 0.4 something percent. So this is a very important point that we are growing the loan book now in a responsible way. But more than that, asset quality is giving us that kind of, let me say, pride or happiness.
The standard point, like you said, is the deposit franchise. And let me break it for our viewers. There is almost a war of liabilities. There are money is moving or savings is moving into equity markets. So all banks are fighting. And even in a competitive environment, if IDFC First Bank is able to grow their deposit franchise at an enviable growth of about 39%, I think that's incredible. But going forward, how do you see your deposit franchise growing? For next 2 to 3 years, do you think you can maintain a run rate of 25% plus?
Not at 25%, 30%. So we are very confident of that, to maintain that. In any case, it's a need. If anyway our bank has to fund its growth, we want to fund it all by deposits. We don't want to borrow anything. And to top it up, we also need to pay the legacy bonds. Coming up about 7,000 crores or 10,000 crores is coming up for repayment this year. So we need money for 2 reasons. That is why we're going to grow deposits so strongly.
What is your view on the way how the unsecured loan as a category is moving, A, for the industry, and then IDFC Bank's view? Because that, in a sense, some would say is the high growth area, but that is also an area where the regulator periodically has been raising concerns.
No, we should definitely be very, very, very careful. In unsecured, we should be very clear how you're doing it. If you're doing unsecured on the basis of, cash flow financing, then you are relatively safer because it is more secured than really, through cash flow. So in our case, we have this personal credit, which is basically salaried personal loans or personal loans, digital personal loans, and such products. That is about 15% of the loan book. We have been moderating it. And then rest of the facilities are more in the case of defined end use, like education loan, or consumer durable loan. They're more end use defined. But where end use is open, as in the retail personal credit, that number is about 15%. We are keeping it moderate, and we are watching credit quality very carefully. The good news is that even in that book, just to tell you, Nikunj, the gross NPA is just about 1.5 to 1.6%. Net NPA is just 0.5%. So we are very careful there.
I'm going to quote a line of yours which you shared with us 2 years ago, that at IDFC First Bank, the management is fetish about NPAs, which is that they are not careful, but they're extremely careful in the way how NPAs would move. So can I get a sense that you will be able to grow at the current run rate, where you already indicated a second half recovery, but you are extremely confident that you will not be compromising on your book quality? The NPAs will not go irrespective of what is happening to the growth.
You can take it, this is on record, you can take it from me that we are super cautious about this, first of all. And our guidance to the street has always been gross NPA of 2%, but our reality is our gross NPA of X infrastructure running at 1.55. We always talk, in fact, retail NPA is 1.38 against guidance of 2. Net NPA we guide for 1. We are running 0.4, 0.5. So now looking ahead, I can assure all of you we will be super cautious, and we don't expect to anywhere even get close to a guidance. We'll probably be in the zone where we are today.
If I look at the notes of your call and what you've stated, you are committing to a recovery in second half, and you expect that the first half would be slightly under pressure given that there are some legacy loans which you will have to deal with. When you are indicating about a second half recovery, what exactly are you referring to?
So no, there is no legacy issue. Just to be fair and just put it clear. The thing is that in the first of all, it's not the first half is stressed or anything like that. It is the way we're building the business. As I always tell you, we are building this bank for the long run. I'm not looking at quarter to quarter hits. Eventually, it plays out well. For example, like last year, we posted 2,950 crores of PAT. The previous year, we had posted 2,450 crores of PAT. So eventually, numbers are showing up well, but we build for the long run. Now, keeping that picture in mind, for example, we were doing digital loans. Now, in digital loans, we have a partnership with our digital partners. We are moving over to a structure where they will start giving us FLDG, like first loss default guarantee, which means the credit cost pertaining to the loans coming up in second half will not hit our P&L. But for that, you got to pay up this quarter. So there is some upfronting of costs coming up, and therefore you might find you'll see the credit cost more like flat all through the year. But basically, the profitability sense, think of it like first quarter could be flattish, second quarter could take off, but Q3, Q4, we are expecting at a PAT level, the bank should start posting really handsome profit. Let me say, 4-digit will be achieved by the bank is what we feel, and probably by a margin.
I again want to point out this important aspect of deposits, something which markets and our viewers, they need to appreciate, that garnering deposit growth at this kind of an environment, when, trust me, every banker is crying about a war of liability, I think is incredible what IDFC Bank has achieved. My question to you, Mr. Vaidyanathan, is that are you achieving this largely because of your branch expansion, or this is largely digital onboarding which is helping you?
See, it's not just distribution. There's a lot of power in a brand. To become a brand is a very momentous occasion in anybody's life, any institution's life. So the last 2 or 3 years, we become a brand. When you become a brand, it attracts money. And when that is an invisible force, you can't discount it in terms of number of branches or interest rate, etc. It's just an invisible force that comes at us. The goodwill the bank is getting. A bank is getting really goodwill. So when our people just wish us, seniors, sometimes when our people meet the people who are raising deposit, they kind of bless us, and they tell our employees like that. So some of banks are acquiring goodwill. Of course, we also are growing the branches, but the short answer is that our branches will not grow in proportion to deposit growth. For example, last year, our deposit went 40%. Branches did not grow 40%. We expect the same phenomenon to play out next year.
Last follow-up questions, which is that you've expanded a lot in the credit card business. You've expanded a lot in 2-3 years in branch network expansion. When will the benefits of all that start kicking in? Normally it takes 2 to 3 years before the real benefits and synergies they kick in.
Q4 of this year, you should see meaningful contribution from these businesses. That's when we expect the credit cards to stop losing money or almost get close to break even. Also, we launched many new businesses. We launched wealth management. By the way, wealth management is growing by 66%. It has already touched 16,000 crores of AUM, like 10,000 crores last year. So that is really coming like a rocket. So all of these businesses will start throwing cash. We launched gold loan business last year. That will have its own, period before it becomes profitable. We launched prime home loans. It's a job to launch all the businesses keeping the longer picture in mind.
If one looks at your current ratios, and if you are maintaining the credit growth, what you've just promised, can I say that somewhere in FY25 you would be needing fresh capital and there could be a capital call?
Yes, you should expect it from us in FY25. And frankly, the markets have been quite giving for us in terms of the price to book. We are well valued. We're running at a premium to the book. So therefore, if you raise capital premium, it actually helps existing shareholders because book value per share goes up. And also it'll make the bank more, have a stronger capital base, can help us, grow in a more safe way going forward.
This is the first interaction, at least for this financial year. So last but one question, how will FY25 be different from FY24 in terms of product launches, new innovation, new schemes? Is this anything which is on the block from IDFC Bank which we should look forward to?
Yes, 25 mainly is coming on a very strong base of profitability. Remember, we're almost touching 3,000 crores of PAT. Our bank never saw this kind of numbers, in our lifetime. It's the record highest. So it's coming on a very strong base of profitability. We expect profitability to go up next year. We expect the expenses to growth to slow down. Our expenses last year grew by like 28% or something like that, 29%. We expect expenses to grow by 20-21%. So we're going to slow down expense growth. We expect income to grow faster than OPEX by a meaningful number, and maybe by 500 basis points, 400 basis points. And then, that will open up the jaw profitability. That's one big thing. In terms of product launches, of course, we already launched many. We believe some of these we'll start reaping benefits of it. So more than launching. But yeah, our app, we're very proud of it. So we think we will continue to make like a super app. By the way, I don't know if super app doesn't mean super app, like as people know it, but like a superbly performing app. If you haven't used it, any of you viewers or yourself, please try our bank account and try our app. It's something very special.
Well, I really look forward to experiencing that. And my last question is that every time I interact with you, I just personally learn something new. 3 years ago, it was all about how you were interacting with your customers. You went on field trips. You really interacted with a lot of women entrepreneurs. Then I learned that you've just bought a new motorcycle. And before I realized that, okay, we understood that you've started playing cricket also. So personally for you, FY25, how will that be different? I can see you're looking different already.
Yeah. Well, yeah, of course. See, first of all, there is a zing in the bank, and everybody's feeling happy and proud about how the bank is achieving. Employees, I tell you, whether you or your viewers, please talk to any of our employees. It's an open, you talk to any of our employees, any of the branches, you will see the buzz. So we are feeling, good from within, and that will reflect in many of the things, the kind of stuff you talked about, whether driving a bike or playing cricket, etc. It just shows, it's all around joy. This is some joy in working in this bank, actually, being in this bank.
But just before we wrap, I just want to share this with our viewers that it must be a great feeling. I mean, when you left the building where your current office is, you left as an employee. And when you came back, almost after 15 years, you came back as a promoter and as a owner. So it must be a great feeling, right? When you look back and when you analyze how things have moved for you personally.
Well, things have been great. See, the Indian economy has really done so well. And some providential stuff of being able to merge capital first with the bank was a very defining moment. When people use the word legacy, etc., I never use those words in a negative way because I feel end of the day, as part of the same machine, we got the bank account. So of course, it's a big thing in our lives. But I don't use the word like promoters and all that stuff anymore. Actually, not that I used it before also. Because end of the day, we are all, nobody's 100% ownership of a bank. You may have 1%, 2%, whatever. So we are here in a fiduciary capacity, and we should be respectful of that.
Well, really appreciate your time. Always look forward to our conversations, and thank you very much.
Thank you for a very insightful conversation, Nikunj.
Well, from